welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we talk about the latest trends of the stock markets, help you understand which sectors and stocks are doing well in trade today and what should be your investment strategy as we approach those all-time high levels now on the Nifty. We've already seen the Sensex up at record levels, the Nifty Bank, going past that 43,000 mark on the last day of the November series. But remember, this is the December series, which has historically really not given that many returns. But are things going to change this time around? That's going to be the focus of our show today. First up, a quick check of how the markets are doing at this point in time. Well, it's a down day to start off with. It's a 60-point cut that you can see on the Sensex, 62,218. The Nifty also at 18,478. There's a 5-point decline, so very minor declines coming in. Flat to a negative bias can actually be seen on the benchmark indices. Talk about the Nifty Bank as well, because that index solely was responsible for the markets really taking across to those all-time high levels yesterday. Today there's some profit taking place, 0.3% cut for the Nifty Bank. The private banks are the culprits right here, seeing some cuts right now, but the PSU Bank still up 0.5%. The financial services also down by half odd percent, so that's as well putting some pressure on the Nifty as well. Talk about the mid cap and the small cap. Those are the outliers today. The small cap index up by over 1%, and so is the mid cap index as well. Those are the shining spots in today's trading session, and outperforming the overall benchmarks as well. India VIX down by 2.2% at 13.1 levels, so comfortable levels right there as far as the India VIX is concerned. In fact, if you talk about the advanced decline ratio on the Nifty stocks, you'll find that 28 stocks are in the green, 22 stocks in the red at the moment. Which are the stocks that are performing very well? Well, you can see HDFC Life as the top of the charts on the Nifty. Coal India, Tata Motors, Hero MotoCorp and Maruti. So auto space really taking to a top spot as far as the gainers are concerned on the Nifty. What's not supporting the market sentiments today? The banks, clearly. ICICI Bank, Kotak Mahindra Bank down by almost 1%. Hindustan Unilever, Asian Paints and Nestle, the other laggards at this point in time as far as the top Nifty 50 losers are concerned. You can also see the other FMCG majors like Nestle and ITC also declining in trade today. Britannia also down. So that FMCG portion is definitely not doing too well in today's trading session. But complete contrast in the life insurance space. HDFC Life as a top gainer, SBI Life as a top loser in trade today. Let's welcome our guest for the day. Nirav Chedda joins in from Nirmal, and he's the technical and derivatives expert. Welcome and thank you so much for taking the time out, Nirav, for this discussion. Well, we did see that both the October and November series, where we had you speak about how the series went by, have been good. But now at the start of this new series, which is the last series of this calendar year, your thoughts?
Yeah, hi Sakshi. For the December series, the rollovers, if you take rollovers per se, banking rollovers have been very high. Open interest is very high in the banking space, and that is why I believe, it's got crowded. So, it is one sector where one should avoid any longs, at least for the next 10-15 days, where, you will see slowly but steadily some profit booking taking shape, or some
Yeah.
consolidation where bank nifty might not perform that well. Probably nifty will continue to perform, yes. I believe nifty data suggests that the open interest is light, but again, there is one caveat here. See, the cost of carry or the premiums that we talk about. Everyone's talking about the premium for this December series.
Yeah.
The cost of carry was about 1 percentage point, which is a huge amount. For Nifty to get rolled over. So 150 odd points is not very good and hasn't been seen in the last 2-3 years. So again, generally, whenever you have such high cost of carry, it's a sign that reversal will come, probably in the near future, and that's why one should look to more or less book some profits. Yes, you can ride the trend, but if you're long hedge positions, at least in the index, stocks and index futures, where that can save you a lot of money.
Right, absolutely. But the one question that all the investors are looking for is that will Nifty play catch up and touch those record high levels in this series? And where exactly will the money coming from? So help us understand, where are you bullish on in this series, and what about the Nifty?
Yeah. So even though I flagged off, some concerns, there will always be sectors and stocks which will perform very well.
Yeah.
And yeah, for your first question, I definitely believe Nifty should go and touch its all-time highs, which is only about 100 odd points from the current levels.
Sure.
So yes, Nifty should reach that 18,600 odd levels, probably
Hmm.
even more, but then probably, consolidate. So the sectors, which I feel will do well are firstly metals. I really like the metal sector as a whole. This sector, I believe, has bottomed out, and lot of shorts have been covered. You see, most of the metal stocks, they are all
Hmm.
light open interest, and whenever such stocks, you see such patterns,
Sure.
you will witness good buying action coming in the metal space, or probably in that sector whenever this open interest is less, because not many people are holding, so
Hmm.
there is no one to be selling into that particular stock. So what happens is, longs get built in and you get a good 10-15% from there. So that's what I'm expecting. The likes of Hindalco, Tata Steel, JSW, SAIL, NMDC all should do pretty well. They are light on open interest and very good at this point of time.
Okay.
Also, the IT sector, in the last interview that we had, I clearly mentioned, IT sector should do very well as well.
Hmm.
So IT sector, I definitely believe, will continue its last month's trend. It is still, the open interest is still live. Infosys, TCS, HCL Tech, these are the stocks which can perform very well. So, continue to buy IT sector and hold on. Um,
Okay.
and and banking sector, as I said, that is one sector one should start booking profits and stay away from
Okay.
this sector from the last 10 for the next 10-15 days or.
Okay, so a complete contrast from what we have seen so far in the November series. Avoid banking and start looking at profit booking in this space in the December series. Metals and IT sector could be the performers this time around. Let me talk about a few stocks. Help me understand, where have you seen the maximum rollovers from the November series in terms of stocks, and where do you see investors should continue to place their bets?
Yep. See, if you see the stocks where rollovers have been very high, so there's no clear trend as such. But yes, stock specific. You see a Bandhan Bank which has been under selling pressure.
Yeah.
Um, ICICI Truly, Manappuram. These stocks, they have been consolidating or coming down, and then you're seeing huge open interest being built in the current series at the start of the series. That is not a very good sign, because after a point, public cannot add to longs, and you'll have to shed positions to move up again. So
Sure.
while shedding positions, some selling can come in. So yeah, even Indian hotels, Ashok Leland. So these are the stocks where one should stay away. So whenever you will see a negative trend in Nifty, and that day if you see selling, these are the stocks where which you can probably sell, and you can get a good grip on it, and some buying can come in.
Okay.
So these are the stocks which very high open interest in terms of rollovers for this current series.
Okay, understood that. In terms of your stock specific ideas for this series, which are the stocks that are on top of your radar?
Yeah, see, there are two stocks that I really like. The first one is Reddington. So again, this is a cash stock, but I'd like to give it here because this stock has the potential to move up very fast in the coming days.
Okay.
After a year or so, a very big breakout has come in
Mm-hmm.
Reddington, and I believe this stock can move up towards the 220 to 40 odd levels pretty soon. So look out for the same. You can buy it at current levels. 170 is the stop loss, and 210 odd can be the target. The second stock is M&M Finance. It witnessed a breakout at around 200 levels, went to 250 odd, came down, retested the breakout, and has now started to move up again. I believe this stock can also perform pretty well. Buy this stock at current levels. 204 should be the stop loss, and there's a possibility of 230 coming up.
Okay, understood that. Well, thank you so much, Nirav, for being with us and sharing all these stock ideas and overall insights on what can we expect in the December series for the markets. Well, overall speaking, Nirav does believe that there are some cautious signs, some overbought signs that you have to carefully look at in this series. Never mind, the Nifty will continue to surge and may touch those all-time high levels in this series, but then look at consolidation. So the sectors that you need to start looking at would be metals and IT, but avoid banking or start looking at booking profits right there. The two stock recommendations from Nirav have come about: Reddington and M&M Finance. Targets for Reddington 220, and also for M&M Finance it is 230. So keep those stocks also in mind and do speak to your own financial advisor before taking a bet right there. Well, let's quickly look at how the markets are shaping up. Still quite flat with that 10-point cut on the Nifty and about a 70-point cut on the Sensex. 0.1% or 0.2% of a decline is what you can really see. We'll have to really wait and watch to find out whether any movement really comes about at 2 p.m. or 3 p.m. because that's when we do see some of the changes happening. But beginning of the series, on a somber note, we'll continue to see whether there is Christmas cheer really spreading in going forward as we speak. Thank you so much for tuning in for now.